accounting cycle. So ano pa hinihintay nyo? Matuto na!
Magandang umaga sa lahat. Kung may plano kayong kumuha ng kurso na may kinalaman sa negosyo, ito ang life hack para sa iyo. Bago ang lahat, tatalakayin muna natin kung ano ang merchandising business. A merchandising business buys finished and packaged manufactured products, marks them up and sells them to customers ayon kay LibreTex business. For example, grocery stores. Next is a merchandiser may be either the buyer or the seller in a given transaction, depending upon whether product is being purchased. For example, a vendor is a company or individual that a merchandiser purchases goods from. And next is a customer is a company or individual that a merchandiser sells goods to. So now let's proceed to accounting cycle of merchandising business. So first is the journalizing. Journalizing is the process of keeping a record of all your business transactions, tracking them in chronological order, and generally includes the date, the account you're debiting or crediting, and a brief description of the transaction that occurred. So we prepare some example transactions here. First, on October 5, sell to customer A on account 11,000. So our journal entry here is debit, accounts receivable 11,000 and credit sales revenue 11,000. And next transaction is on October 7, receive full payment from customer A. Our journal entry here debit, cash and credit accounts receivable. So our last transaction is on October 10, purchase of customer B cash 6,000. So our journal entry here is debit, cash, and credit sales revenue.
Second, general ledger or T account. Our accounts number used to categorize types of financial transactions. Also known as chart of accounts, is a complete listing of every account in an accounting system. So example for general ledger. So nakita na to na nakategorize na ang cash sa debit and credit and also sa salary, trade receivables, and service revenue.
Third, worksheet. An accounting worksheet is a tool used to determine the accuracy of the financial statements prepared by a company at the end of the accounting period. It is also assist in keeping track of the steps involved in the accounting cycle. This is an example of worksheet. An adjusted trial balance, adjusting entries, adjusted trial balance, income statement, and balance sheet.
Fourth, financial statement. A merchandising company uses the same three financial statements we learned before: income statement, balance sheet, and statement changes in equity. Example in income statement, it all listed all the revenues minus expenses and it equals to either net income or net loss depending on the results. Example in statement of changes in owner's equity, we have the investment plus net income of the year minus withdrawals equals to new owner's equity. For the statement of financial position, we have the asset equals liability plus equity. Fifth would be the adjusted trial balance. An adjusted trial balance lists the general ledger account balances after any adjustments have been made. These adjustments typically include those for prepaid and accrued expenses as well as non-cash expenses like depreciation. Example of the adjusted trial balance, we have here the account, the debit and credit, and the total should be equal. 6 would be the closing entry. A closing entry is a journal entry that is made at the end of an accounting period to transfer balances from a temporary account to a permanent account. This is an example of closing entry. We have the sales discount, and income summary, and others. The last would be the post-closing trial balance.
A post-closing trial balance is a listing of all balance sheet accounts containing non-zero balances at the end of a reporting period. The post-closing trial balance is used to verify that the total of all debit balances equals the total of all credit balances, which should net to zero. This is the example of post-closing trial balance. We have the debit and credit, and also it should be equal. So that's it for today's video, guys. Hope you enjoy and learn something. Bye!